Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, August 18th, 2008. Well, what we're going to do in today's video, folks, is look at basically the key indicators we've been analyzing over the last couple days that gave us a little inclination that the commodities were ready for a bounce or may continue to see a bounce over the coming days. In addition, we're going to also look at what we were looking at when we discussed how the overall market may be due for a sell-off, as we talked about in the previous couple videos. Now, we had touched on that for one main reason we pointed out on Friday's video, that Goldman Sachs, which is a leading indicator, was not acting very well. And in tune with that, we saw Goldman just continue to get hammered and hammered and hammered. And when Goldman goes one way, generally the market will follow. And we saw that to a T today in the financials. An unbelievable bloodbath in Freddie and Fannie today, as they both got crushed about 20%. Just ugly. And Goldman again was down today, and we've seen the weakness really come back into the financials today overall. Now, the one thing we talked about on Friday was we basically said look for that commodity bounce, which would put pressure as well on the markets. We saw gold bounce, although oil did not bounce yet, and the dollar did decline. And we've anticipated a little bit of a pullback in the dollar as well, which would indicate a bounce in gold, as gold and all commodities are traded in U.S. dollars. And as though the dollar goes, commodities will also trade in their respective ranges according to how the dollar is moving. So we're going to talk about all that today, but first of all, I want to talk about the webinar that we've scheduled now. And I told you guys on Friday that we were going to reschedule one for during the week for those of you that can't do it on a Saturday or time zone issues across the world. And we are going to put one. We've scheduled one, and it's on the website. Go to InTheMoneyStocks.com, click on webinars, and you can go there. There's a link right there to sign up. It's next Tuesday and Wednesday, the 26th and 27th of August, and it's a two-night thing, so it's not that much time each session, but it is a consecutive. You basically would come to Tuesdays, you come to Wednesdays, and you get the full webinar, and it's basically our whole mantra. Everything we believe in, everything we analyze the markets on a basic level will be discussed in that webinar. You can sign up for it on InTheMoneyStocks.com, obviously, as I said. And again, it's basically 2 hours each night, 2.5. It'll go over. We always go over. We give you guys much more than we even talk about on the web page itself. It'll go much longer. So just be aware of that. And again, from 6:30 to 8:45 is scheduled. Will it go to 9 every night or even a little later? Yeah, most likely. But that's up to the instructor, Nick, as he will talk and analyze the markets. He is our top technical analyst or analyzer on InTheMoneyStocks.com. So sign up for that, folks. Get your spots again, because I have a feeling the nighttime session, because we haven't done nighttime in quite some time, will be very busy for those of you, and we can only handle so many people in the webinar itself. So sign up immediately if you can. Make sure you get your spot. Once you sign up and it goes through, you will be guaranteed a spot in that webinar. All right, folks, let's get into the market analysis first off, and let's go right to the ES Daily, make that intraday chart. And what you can basically see here is that the market was in a downtrend most of the day. Really starting right around this 9:30 time frame, you see the little pop around 9:30, and then right into the 9:30 frame, you see the hard sell-off coming in. And that was just basically the market all day. You saw continued downward pressure on the markets as Freddie and Fannie took a dive. For the most part, especially early on, oil was up with gold. Then oil came back in, and gold continued to stay strong today. And we're going to touch on those charts because we do feel there's continued upside in them, as we had called for today, for a bounce in the commodities overall. So again, those were keys. Goldman Sachs, as I mentioned before, was a definite key in letting us know that the market was going to pull back, and that was also mentioned in the previous videos. So let's go right into the analysis here. The intraday chart, you can see the downtrend. I mean, it's all there is to it, folks. Just a basic downtrend all day until the close. You got a little bit of a rally into the close. Tomorrow we have PPI numbers coming out, which will tell us on inflation how the market is handling it on the producer side. We got the CPI, which was consumer-based inflation gauge last week. This week, tomorrow, we'll get the producer side of things. How is it looking for producers out there? Are they paying tons more? My guess it'll be pretty hot, but the market is anticipating that, so that's another thing you have to realize. It doesn't matter what the analysts are saying out there for the number. What it matters is what is the gut of the market telling people, what does the market believe, and whatever that means, it'll react to that number, not what the analysts are calling for. Generally, they're about one and the same, but they can differ here and there. Okay? Let's now go right into the daily charts of the SPY, because I really want to go back into these daily charts, and then we're going to look at the commodity charts as well. Now, remember the key line we've pointed out in every video about what has to hold unless we're going to see some more downside in this market. All right, and this is it right here drawn in, and we tested it again today on the SPY, as you can see. And at this point, this line needs to hold. You start breaking down here, you look for consolidations. For instance, tomorrow, let's say we trade down to this level on a candle, and all of a sudden now you're looking at a possible consolidation pattern and another breakdown coming possibly as low as a double bottom, but we will reanalyze that at day to day. What the key in this market is you obviously have your upside resistance right around here, and you can stretch this line all the way back and so forth, but it's all about the upside being less, and that was the key to Friday's analysis, is that you look at the upside to the downside. Here's the downside support, and we were trading right here. So your upside bias was that much. That's what you could have made if you had gone long and we had gone up today. On the downside, you had this much. So risk-reward was favoring the downside, obviously down to this key level. Now, again, we want to watch to see if this level on the downside breaks, which basically comes into focus with the 20 moving average being equal to the line right down here. And again, this line continues to move up, so eventually one way it's going to break. And that's going to be the key. Now, we do think that there's a little more downside possible in this market over the next week or so, but we do think that there's another move up coming prior to late September, October decline back to lows, if not lower. So again, that's just brainstorming what our basic analysis going out to the near future is over the next couple months, and that is subject to change, obviously, depending on how the charts form and our calculations come to fruition. But as of now, that's what it's pointing to. It's pointing to a little downside here, then another nice move up, and then a big move down, at least to the double bottom range here, if not lower. And we'll keep you posted on that as well. So really, this is what you're watching now, guys, is that on this SPY daily chart, we want to see exactly where this is going. Do we break down to the downside here, or do we break out to the upside here? You break out to the upside, again, as we talked about, you have a nice move at least to this point, and we'll possibly even see the 200 moving average eventually at some point, which, as you can see, is a good solid resistance point there on the chart. That's the upside ranges, okay? On the downside ranges, you're talking about initially, looks to be right around this level. Then after that, next support would be coming in right here. After that, here, and ultimately the double bottom range all the way to the downside here. And that's just briefly looking at the chart and analyzing it on the fly kind of thing. One thing I would point out is that the one thing that bothers me a little bit is the light volume nature, although today was a pullback on very light volume. We only did about 1.6, 1.7 million contracts today, which is a very light day, but that's August for you. All you have that have been traders out there for some time now know that August is the doldrums. Mondays and Fridays in August are the most light, as people are take extended weekends. And also, you have August in general. Everyone's on vacation. The kids haven't gone back to school yet. Traders are taking vacations and so forth. And that's what you basically have there in the lighter trading. So whatever the move here is into September, into that holiday weekend coming in on early September, you got to analyze it based on volume included, because you want to see which way is it going on light volume, and once we get heavy volume in, do we reverse that angle and go a different way. Now the Nasdaq we talked about in the last couple videos as being extremely extended and needing a pullback, and today you started to see that pullback, a 35-point drop on the Nasdaq overall. And just to mention what the other indexes did, we did see the Dow down 180 and the S&P down about 20. So a 1.5% decline across the board on the indexes today. But the Nasdaq of all the indexes has been the most extended and the most strong, and you needed to see a pullback today, and that's exactly what we got. I still would like to see a more pullback if it's going to be a healthy market in the Nasdaq. Really right around here would make me happy. Anywhere where it touches the 20 moving average again, and then a consolidation move, possibly another breakout to the upside. Maybe going as high as here on the Nasdaq. Again, that's a little speculative as it's far in the future. But let's look to see if we can get a little more downside in this market tomorrow or in the next couple days. Now that PPI number is going to be key tomorrow. There's some housing data as well at 8:30 a.m. Eastern Time. But overall, it's going to all come down to that PPI number, and we'll have to watch to see if we have a big reaction off of it, all right? Also, keep in mind commodities and the dollar. When the dollar drops, generally commodities rally. We saw the UUP. Let's take a look at that UUP today. See that little bit of a pullback. Not much, but it was a little bit of one off this double top high here. And if this continues to come back in, the commodities should get a bounce. Look at the GLD. We called for a bounce on this Friday. You got a nice little move up. Now, can this continue? That's the question. We're going to watch for that to possibly continue over the next few days to a week or so. And it wouldn't even shock us to see at least it getting up in this range, possibly as high a bounce over the next week or two to this range. Okay? and that might be a little jumping ahead as well. But first, number one, you want to just watch this resistance here on the GLD. If it gets through that, then look for this point right around here, which seems to be about 81.5, 81 on the GLD from 78.80 where it is right now. Now the USO, which mirrors the oil, basically follows the oil for us, is still sitting up top this 200 moving average. Now everyone expects it to hit this 200, and it may do that. But oftentimes when everyone expects it, sometimes it does not do that and bounces before it does that. Watch for the 20 moving average as being key resistance on the USO chart. Right around here, let's get a price on that. That's approximately 96 or so, 97 it looks like, that 20 moving average, give or take. Alright, watch that very closely. Alrighty, folks, so you've basically seen now that we saw that pullback coming in the market last week along with the commodity bounce. Today we got gold to bounce. Let's see if we can get oil to bounce over the next few days. Join the webinar. Get signed up immediately. It'll be a great one. Have a wonderful day. Join the chat room, the Swing Trade Alerts. Email us with questions. Take care.